Hi everyone, and welcome to Phoenix Global Mining's webinar. This is Jack Bourdais from RB Milestone Group. Phoenix Global Mining is publicly listed on the AIM exchange in London under symbol PGM and on the OTCQX in the US under symbol PGMLF. Joining us today is the company's CEO, Dennis Thomas, and the company's director and CFO, Richard Wilkins, who will be providing an in-depth overview of Phoenix, its recently announced updated resource for its Empire copper mine, and its upcoming milestones. Please note, today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. Lastly, RB Milestone is not a registered investment advisor and/or broker-dealer. It is now my pleasure to introduce you to Phoenix Global Mining's Director and CFO, Richard Wilkins. Richard?
Thank you, Jack. Well, good morning or good afternoon, everybody. Thank you for joining this webinar. I am going to kick off by spending just 2 minutes setting out why we consider Tuesday's press release to be significant. The Empire Mine open pit resource that we published in April last year with the preliminary economic assessment, the PEA, was dependent on inferred resources to get the tonnage. As many of you might know, inferred resources cannot be included in a pre-feasibility study, let alone a bankable feasibility study. That meant that more drilling was required to upgrade the resources, which in turn was more time and money and obviously less certainty. And also, we didn't have enough overall grade to support the project economics without using a forecast higher copper price. As a result of Tuesday's announcement, we now have sufficient resources in the measured and indicated category to support an economically viable project at current metal prices. There's over $800 million contained metal in the open pit measured and indicated resource at current prices, and the measured and indicated resource is now sufficient for us to increase the cutoff grade to generate mineable resources at 0.61% copper grade. That grade is 30% higher, for example, than the 2017 global average for copper oxide open pit mines. That means we will process less tons at a better economic return. It will also mean lower capex, hopefully nearer $50 million rather than the $70 million in the PEA. With more manageable capex, we're more likely to fund all of it or most of it by debt. That will mean less dilution, which is our objective as shareholders ourselves. We have simple technology. It's heap leach, open pit, SXEW, and a straightforward permitting process with no obstacles foreseen. So what this means is the company can now move full speed into production mode rather than requiring more exploration. We will be targeting at least 8,000 tons of combined copper and zinc to start with, which at current metal prices would generate some $50-odd million of revenue annually and perhaps some $25 million annually in pre-tax profit. Of course, we will focus on optimizing the project economics as we go forward to the bankable feasibility study. But we also retain the upside of the open pit gold and silver, which is significant, as well as the potentially massive underground and near-surface sulphide potential, as evidenced by Nigel Maund, our consulting geologist's report that we published in April, and indeed our Maiden inferred sulphide resource at Red Star, which we published on Tuesday with the updated Empire Mine open pit resource. So with that, I would be delighted to hand over to Dennis Thomas to run us through the presentation. Thank you.
Many thanks, Richard, for that excellent summary. The presentation that I'm going to whistle through now very quickly so that we can get rapidly to some questions and answers, which I think would be very desirable. is available on our website at www.pgmining.com in the presentation. So please feel free to have a look at that if you've not already seen it. So I will do a very, very quick run through the presentation and open it up to questions and answers as soon as I can get through it. So Phoenix Global Mining, AIM listed, as Jack said in the introduction. Market capital at the moment of just over 6 million pounds sterling. Present share price as of today's date of 16 pence. The overview, basically, Phoenix, the flagship project is the Empire Mine in central Idaho, where we're looking to develop, as Richard said, the open pit oxide ore body of copper, zinc, gold, and silver. We also have the cobalt exploration projects up in the Idaho Cobalt Belt, Bighorn and Red Castle prospects, and geopolitical stability. We're in Idaho, top of the perceived risk ranking as far as the Mining Journal 2018 report is concerned. However, getting back to Empire particularly, located in Idaho, northwestern United States, central Idaho, lowest risk mining investment perception, as I've said, and wholehearted support from the governor downwards. Federal and state permitting running concurrently, natural resource-based economy, fastest growing state in the US. It's an excellent place for us to be. The Empire Mine itself historically produced copper, gold, and silver 1901 to 1942 on high visibility sulphide loads, very high grades, between 6 and 8% reported. Much of the copper, in fact, was lost. Mine closed down in 1942 when America basically joined the Second World War. Last shipment from the mine was tungsten, very important, very high grade tungsten from the lower levels. The Empire Mine history, which again I'll let you read at your leisure if you look at the presentations on the website. The historical from 1964, only the surface has been looked at, been through a number of Canadian junior companies until 2015 when Phoenix took control of the operation. The claims in Custer County, we have 5,717 acres. We originally started with 819 acres, so we've expanded considerably from the original acreage. Most of the present Empire ore body is on the blue patented land. The ore body itself, as I'm sure many of you know, we're dealing with a sulphide. We're dealing with an oxide ore body above sulphide workings. The oxide portion, the upper portion above the green line, is in fact oxide, and that is where our open pit will be. Meanwhile, the underlying sulphides, which represent the bulk of the mineralized system, have remained untouched ever since the mine closed down, and that represents the exciting exploration potential that we will be looking at in due course. The mine itself is a skarn deposit, and you see there, in fact, the blue portion with the open pit and the red star discovery represents just over a kilometer long of an ore, basically an ore system which is going from northwest to southeast of approximately just over 5 kilometers. We really are just at the tip of an iceberg. The horseshoe ore body and the Windy Devil ore body represent massive extensions to the present Empire pit. Down below, you will see a cross section through there, and you'll see also the potential that we have, the lead and the zinc in the horseshoe section on the right hand side of the bottom section. The pit itself, you'll see, is mostly on patented land, the blue patented land. The red star again to the northwest of the northernmost portion of the open pit. And our drilling program has been very successful, as Richard said, in converting our inferred resource into measured and indicated, which is basically going to underpin our bankable feasibility study. Navarre Creek, which is one of the extensions 4 miles to the west that we acquired, Carlin-style gold mineralization, all part of the same mineralized system, huge mineralized system that the Empire ore body lies on top of. Nigel Morn covered this in his report, and in fact, of all of these bullet points, the final bullet point, the exceptional geological location, as Richard said, that maybe 1 to 2% of this ore system has been tested along its geological strike. It's a district-style opportunity and is an exciting potential in the sulphides. The oxides really, we say, is the low-hanging fruit and really the tip of the iceberg. The complexities of the pit can be seen in this slide. Complex skarn mineralization, which has been, if I may say so, brilliantly interpreted by our geologists. Ryan's done a great job, in fact, in not only recruiting the team there, but also driving the understanding of what are generally known as very complicated ore bodies. We have a much greater understanding of what we have there. And of course, the resource update, the figures, we're looking at considerably increase in percentage, the copper increase particularly. The zinc tonnage has more than doubled. The gold, we're looking at 75% increase in gold. Silver ounces, 69%, nearly 70%. So we've reached our target of being able at 15 million tons of measured and indicated at a 0.184 cutoff. As Richard said, at a higher cutoff, in fact, we now have a life of at least 8 to 9 years to plan, which will underpin our BFS. Exciting discovery at Red Star, where we have a small resource, very high grade silver at 173.4 grams per ton, high grade lead as well, all in sulphide mineralization. So the mineralization from Red Star going northwest is in sulphide. Company milestones we have at the moment. Our objective is to get into production late 2021. You'll see there we're working now at our BFS, which we believe will be complete somewhere Q2 next year, 2020. The work that preceded that we've done in doing our PEA has been to a very good standard, and I think Ryan's looking forward to driving this program forward. Construction financing, project planning, construction financing will be ongoing now as we go forward, and we're looking at construction late 2020 and in production, as you'll see, at the back end of 2021. Red Star exploration program, that represents an exciting move forward. The sulphide potential, well, we're sitting on the tip of an iceberg. We do believe that the major value of the Empire mine and around the Empire mine is in the open pit. Jack, I'd like to sort of throw it open at this stage. I don't know how we're doing for time, but very happy if we could take some questions. Jack, I'd just like to add a couple of points to my what I was saying there. The slides that are present at the moment, seasoned management team, board of directors that have actually built mines and are focused, quite frankly, on developing the Empire mine and bringing it into production. Excellent team in Idaho. And also, if I could just add, investment highlights, which people like to take a look through.
Perhaps we could add that Ryan McDermott, our COO and the general manager at the Empire Mine, is also on the call and will help to answer questions.
Yes, Richard, thanks. I'd also like to add, actually, sorry, yes?
Dennis, Richard, and Ryan, the first question from a private investor, can you run through the permitting process, and do you foresee there being any risks during that process?
I think that's one for Ryan. Yes, please, Ryan.
You bet. I'd be happy to run through that. About 2 years ago, we hired an independent third-party environmental engineering firm, Cascade Earth Science, to begin baseline studies, wildlife, hydrology, surface impacts, everything that we would essentially to answer all the questions that will go into a plan of operations to eventually permit the project. In that period of time, they have identified no fatal flaws. We have a unique project from an environmental standpoint in that the basin that drains Empire does not have a direct link to the Pacific Ocean. Therefore, we're unique in Idaho in that there are no salmon or steelhead. Another unique characteristic of the project is depth to groundwater. In Idaho, 90% of permitting is about groundwater. We're between 600 and 1,000 feet below the deepest existing working to groundwater. So that will be a significant advantage to permitting the project. We are on a brownfield site, meaning there's been a history of mining, but there are no impacts that have been recognized from the previous mining. It was a fairly clean operation. So we believe that the permitting process is going to be very straightforward. There's nothing simple about permitting anywhere, but this site, I believe, is going to be a lot smoother than most sites.
Another question, Dennis, Richard, and Ryan, would be in regard to your upcoming milestones. What would be the approximate capital requirements for your upcoming milestones?
Richard, would you like to take that?
Yes.
A combination of the three of us, really.
It goes without saying that we will need more money to get to bankable feasibility and construction finance. Probably we will need in the region of maybe $4 million to get to the BFS. Now we have this new resource. It is very much our determined intention, actually, to fund our ongoing needs as far as possible with debt-structured product and not with equity. So perhaps the front end to a mine finance or advance payment against metal offtake or a bridging loan of some sort. Discussions are already underway with relevant parties. I'd mentioned that management is one of the largest shareholder blocks, so it's very much in our interest to minimize dilution going forward. So we would be looking to fund what we need to get to bankable with debt-structured product as far as possible. And then for construction finance itself, if we are down at nearer the $50-odd million, which we hope we will be, I'd like to think that we might be able to finance that entirely with debt. But if not, the equity element in it would be kept to a minimum. So we feel confident that we will get the money to bring this to fruition. We've got lots of interest from metal trading houses and mine finance houses who have been approaching us already, and discussions are underway.
I think I would also add that the size of what we're sitting on top of has not gone unnoticed in the world as well. So it's interesting that we do appear to be on the radar of quite a number of companies, particularly with our relatively short lead-in time to production to actually be producing copper.
What are your cash flow projections for 2022, 2023, and 2024, assuming production starts late 2021?
Well, I sort of answered it in the introduction. Back of the envelope calculations, and these are in-house calculations, which of course will be optimized as we work with our consultants towards the bankable feasibility study. So without any attempt yet to put mine schedules onto the project, which would probably or hopefully would enable us to mine higher grade metal to start with lower stripping costs, hopefully. Leaving that aside, we would be looking at about, at current metal prices, we'd be looking at about $50 million in revenue annually, and we estimate in the region of $25 million annually in pre-tax profit. The tax burden that would come off the project by the time we've put through the US depletion and other adjustments, we would hope it would not be more than about 15%. So we should be generating from the commencement of production at least $20 million of free cash flow annually. And our intention with that would be to immediately implement a modest dividend policy, and the rest of it will be plowed back into the operations to continue to evaluate the underground potential generally, plus of course Red Star and the Navarre Creek gold potential.
I think as part of the BFS process, I'd add that obviously optimizing what we have, it'll be a work in progress over the next few months, no doubt.
Thanks, Dennis and Richard. We'll take two more questions. Another question would be, what gold resource will be needed to justify recovering the gold?
I would say we've already got that resource that justifies recovering the gold. We've got 109,000 ounces in the measured and indicated open pit resource. So we will be looking, although we'll start production with copper and zinc, we will be looking at all ways we can as quickly as we can to bring the gold and the silver into the equation. So it will not be lost and it will not be ignored, and there's significant value there.
Yeah, I think you'd like to have a quick comment.
Dennis, in fact, on your slide 16, in fact, you can see that the gold at current metal prices has a value of about $178 million.
Indeed.
Silver's got a value of $91 million at today's value. So we certainly will not be ignoring it, and that will be complete upside onto the numbers that I was mentioning earlier for the copper zinc project.
And I think the BFS is focused on a short mine life, in the sense that we're fixed to measured and indicated, and particularly at the higher cut-off grade of maybe just over 10 million tons. But having said that, of course, when the heaps have extracted the copper, they still contain the gold and the silver. So and also at the high cut-off grade, we would have a lower grade stockpile of ore, which would have been considered waste due to the high cut-off grade, and we'd be looking to put that through, and also then obviously extract the gold and the silver. So in terms of life of mine, it's not just the 8-9 years to which I alluded initially. The surface operation will go on considerably longer than that.
That's all an important part of the bankable feasibility study, and we will address all the metals during that study.
Yeah.
Thanks, Richard, Dennis, and Ryan. We'll take one final question, and this one's pertaining to U.S. investors. Could you provide an update on the OTCQX listing?
We are in the process of talking to our legal counsel on how to provide the relevant legal opinion to our registrars and to DTC in order to become eligible for DTC electronic trading. And so that is a work in progress. It's something we want to resolve as quickly as we reasonably can, and we're working on it. And I think that once we get that, I'd very much hope that the American market through the New York OTCQX will be able to engage with us in a far more active manner. It's something we very much want, and that's why we did it. That's why we listed on or got the trading facility on the OTCQX last October.
Thanks, Richard. Thanks, Dennis, and thanks, Ryan. And thank you, everyone, for joining today's webinar. If you have any additional questions that have not been addressed on this webinar, please feel free to email Dennis directly at dennis.thomas@pgmining.com.